Hey guys, welcome back to my channel. In this video, I am going to share with you information that you need to know even before you begin investing in the stock market. In fact, this is the website that got me started investing in the stock market. Without further ado, let's open up a browser and show you guys the website. It's called fool.com. I will leave the link in the description below for your reference, okay? Now, bring your cursor over to Investing Basic, and there should be a drop-down menu that shows you how to invest your money, what to invest in, and how to invest in stock. I wouldn't focus too much on index fund or ETF funds just because you won't be making much of a return if you invest in index fund or ETFs. Another area that I want you to look at is bring your cursor over to stock market and read over what are growth stock, what are value stocks, what are dividend, small, large cap, and blue chip stocks. Now, I won't be going over each and every single one of these articles. Instead, I will go over how to invest your money in the stock market. Now, going down the list, you will see the type of asset that you can own in your portfolio: stocks, bonds, index fund, and ETF. This article also goes over your style of investment, how much time you want to put in investing your money, as well as information on how much money do you have to invest. In other words, your budget. And finally, it'll go over information in regards to your risk tolerance. How much financial risk are you willing to take? So these are information that are extremely relevant. If you're like me and you're too lazy to read, there's also videos that you can watch. It goes over information regarding having an emergency fund, choosing a brokerage, the difference between Roth versus traditional IRA. In Canada, we have something similar to the Roth or traditional IRA. We call these investment account TSFA and RSP respectively. Finally, what I want to share with you very quickly is information regarding what to invest in. So this is the next article that is important. Now, going down the list, there's another video that you can watch. I highly recommend watching this video. I'll just give you a quick blurb on what it's all about. In fact, this person is going to talk about it very quickly. Here it goes.
Hey there, I'm Dylan Lewis, and in this FAQ, we're talking about how you can invest your money.
Anyway, so have a look at that video. It's 13 minutes long, but it has a bunch of information that you need to understand before you even start investing in the stock market. Now, I want to read you a very quick blurb on why stocks are a good investment for almost everyone. Almost everyone should own stock. That's because stocks have consistently proven the best way for an average person to build wealth over the long term. US stocks have delivered better returns than bonds, saving yields, gold over the past 4 decades. Stocks have outperformed most investment classes over almost every 10-year periods in the past century. Why have US stocks proven such a great investment? Because as a stockholder, you own a business. As that business gets bigger and more profitable, and as the global economy grows, you own a business that becomes more valuable. In many cases, shareholders like you and I also earn a dividend. We can also use the past dozen years as an example. Even across the two of the most brutal recession history, the S&P 500, which is an excellent proxy for the stock market as a whole, has delivered better return than gold or bond. This is why stocks make up the foundation for most people's portfolio. And finally, if you go down the list, it'll give you information on how to avoid losing money in the stock market. The best way to avoid permanent losses is to own a diversified portfolio without too much of your wealth concentrated in any one company, industry, or end market. This diversification will help limit your losses to a few bad stock picks, while your best winners will more than make up for their losses. Think about it this way. If you invest the same amount in 20 stocks and one goes bankrupt, the most you can lose is 5% of your capital. Now, let's say one of those stocks goes up 2,000% in value. It will make up for not just that one loser, but would double the value of your entire portfolio. Diversification can protect you from permanent losses and give you exposure to more wealth building stocks. So that pretty much sums up this video. If you like this video and if you want more video related to useful information like this, please click the like button, subscribe, and I will see you in the next video. Have a good day. Cheers.